I'm here today with Zeeshan from ETC Tax, and we're going to be talking about how you can deliver research and development services to your clients. Say hello, Zeeshan.
Hi, Simon.
Hello, and I can't wait to get started. Please, can I give a virtual warm round of applause for Zeeshan? Go.
Cheers, Simon. Thank you very much.
You're welcome.
Good morning, everyone. Hope everyone is doing okay. I will firstly share my screen with everyone. Good morning, everyone. My name is zeeshan.khilji. I am an associate director at ETC Tax. I specialize in business and corporate tax matters with regards to owner-managed and family businesses. I predominantly work with firms of accountants to help their clients with tax advisory matters, with R&D tax reliefs being one of my areas of specialism. So what are we going to cover today? We will start off with introduction and background to the R&D regime. We will then go through some rules in relation to the small and medium enterprise scheme rules, and then we move on to subsidized R&D and grant funding. I'll also talk you through the rules in respect of linked and partner enterprises in respect of the SME scheme. We'll then move on to the large company RDEC scheme. I'll also just briefly talk about the main things to include in R&D reports, documentation and evidence, and we will finish off with talking about the recent and forthcoming changes to the R&D regime. Let's kick off with a brief intro and background to the R&D regime. So as some of you might be aware, the regime has been in place for around 22 years. It was introduced in 2000 to incentivize UK companies to invest in research and development activities. And it essentially still remains a relatively underclaimed relief, predominantly because of the lack of awareness of what actually constitutes R&D for tax purposes. I will talk you through that in a bit more detail as we go through the webinar. There are two main types of relief. So one that applies to the SME, to essentially SME companies, the SME relief, where companies can claim an enhanced deduction of 230% of qualifying expenditure, or if a company is loss-making, then it can claim a payable tax credit from the revenue. In other scenarios whereby either the company is large or where it's received grant funding, that's where the research and development expenditure credit, the RDEC rules, come in. We first need to identify, so we first need to establish whether the project is actually qualifying. So we need to sort of go through the guidelines, the legislation to make sure that the project itself qualifies. That's the first step. And then we need to go through the various categories of expenditure to then establish whether the various categories of expenditure actually fall within the eligibility criteria as per the rules. So prepared the slide to sort of just go through the R&D framework as a step-by-step approach, really. So as most, if not all of your accountants in the room, I'm not going to sort of go through the standards in too much detail, but essentially according to FRS 102 and IS 38, these are the definitions of research and development. So that is the starting point, really. So we need to start off with ensuring that the accounting definition of R&D are met. Essentially, we then need to establish whether the expenditure is revenue or capital for tax purposes. So for tax purposes, we can all include the expenditure as part of the claim if it is revenue, not capital. It can be capital. So I've come across and I've actually done claims where the costs have actually been capitalized in the accounts, but we were happy that for tax purposes, the expenditure was revenue, and that can be okay. But obviously, need to look at it on a case-by-case basis. The company's project activity then must meet the definition of R&D under the Department of Business, Energy and Industrial Strategy. So the BEI's guidelines are essentially above and beyond, the accounting standards definition. So it's essentially a framework that has got, guidelines and describes, it's got various definitions of what is R&D, and in a nutshell, it sees R&D relief as a two-limb test, whereby we need to look at whether the company has achieved or trying to achieve technological advancement, and secondly, whether the company is trying to resolve technological uncertainties. So these are the two main tests that need to be met, and we will go through what this means as we move along the webinar. And then we need to go through the legislation to then establish whether the various detailed scheme rules are met, both in terms of the overall project as well as the specific activities that have been undertaken. So in summary, simply meeting the accounting definition as per the accounting standards is not sufficient. We need to make sure that the definition per the legislation and the BIS guidelines are also met. There is no restriction on the type of sectors that can actually make R&D claims. So there is a bit of a misunderstanding and a bit of a misconception out there that you have to sort of set the world on fire to be able to claim R&D, and you have to have people working in labs. That's really not the case at all. You can have there's absolutely no restriction. I mean we've done R&D claims on farming businesses, etc., where they have clearly met the criteria for technological advancements and resolution of technological uncertainty. So there's absolutely no restriction on the type of sectors that can make R&D claims. So what's important is we need to look at the R&D project as opposed to the business itself. Any type of business can do this. It doesn't have to be in the IT sector or the manufacturing sector or the technological pharmaceutical sector. There is no such requirement whatsoever. What we need to look at is whether the company is taking a risk, whether it's making an attempt to resolve technological uncertainty. So, this can include, again, the general perception is it has to be something completely brand new, it has to be a new process or a new service or a new product. That is not necessarily the case. It can also include using existing product, using existing process or service, but if you're trying to make appreciable improvement to it and using it in a unique manner, then that can also qualify. And the R&D work it does not have to be successful. It can miserably fail and still qualify as long as the criteria is being met. So I've mentioned technological advancement and technological uncertainties a few times, as you would have noticed. So what does it actually mean?
That's all right. We've got a question in from Karen, and
Yep.
I just want to acknowledge the question, Karen. I'm pretty sure that Zeeshan's going to come on to that, and Zeeshan will answer the question as you go through this morning. But I just want to acknowledge that question, Karen, and if we don't, then I'll make sure that we ask it at the end. Thank you.
Cheers, Simon. So, as I said, I've mentioned technological advancement and technological uncertainties a couple of times. What does it actually mean by an advance for R&D purposes? An advance for R&D purposes is essentially an advance in the overall knowledge in the field of science and technology. So it's not just the stage of knowledge as far as the business is concerned. We need to look at whether the company is actually achieving an overall increase in knowledge in the field of science and technology in its sector. Now, again, this sounds like something that has to be extremely complex. It sounds like something that you might have to set the world on fire. It doesn't really, and it will make more sense as we go through the webinar in terms of a few examples of how the criteria can be met. So what we need to consider is whether something new or different is being done, and we need to focus on the technology that the company's used. So as I mentioned previously, what we need to focus on is whether the company, so apart, in addition to a new product or service, whether the company is actually making an appreciable improvement to an existing process, material, or service. And again, it doesn't need to be anything tangible. It doesn't need to be a product, a device or a product. It can be a service as well. And companies can also take existing processes, materials, or products and actually duplicate them, but as long as they are doing something different from, the actual duplication. So, as long as the company is making the appreciable improvements to, the overall product or service, that can also qualify. If it's sort of routine copying, routine, adaptation of an existing product without making much improvements to it, that is difficult. In those sort of scenarios, it's difficult to argue that the activities are qualifying R&D activities. The second test, the second limb test, essentially, if you like, is technological uncertainty. So what this means is whether knowledge of, whether something is possible or feasible from a scientific or technological point of view, whether that's readily available or whether that's deducible by a competent professional. So essentially what we're saying there is, if a company identifies an issue, or, if a company identifies an opportunity where, it can achieve technological advancement, whether that can be, whether the company's actually got the knowledge to be able to resolve that. So if, for example, a group of peers sit together, come up with an idea which they can, where established that can be resolved overnight, by having a few conversations, again, unlikely that will constitute technological uncertainties. We need to focus on, what the uncertainties are, what the challenges are that will face the business, and the business needs to demonstrate that it's not sure and it's not certain whether those uncertainties will be resolved without taking a step-by-step approach, without going through a proper plan. And sort of, going through a iteration process to then be able to achieve the outcome at the end. The focus essentially on the technological uncertainty. So it's the scientific and technological uncertainty as opposed to the commercial uncertainty. So say, for example, if a group of peers sit together and from a scientific point of view, they can resolve the uncertainty immediately, but they're not sure if the customers will actually buy their product or service. Again, that is not technological uncertainty. That is only uncertainty from a commercial point of view. So as an example, if you've got a company that's trying to build a diagnostic tool which combines various platforms, tools of artificial intelligence, for example, but it's not sure about the method that it needs to adapt to update the AI, or the method that needs to adapt to actually integrate the various platforms together, because it's never been done before, the knowledge isn't out there, that can constitute technological uncertainty. In terms of, so what, again, this is something that I've come across a number of times, whereby advisors have included costs in respect of the entirety of the project. What we need to make sure is that so the R&D project, it essentially has a life cycle. So when does an R&D project start for R&D tax relief purposes? It starts when the work begins on resolving the uncertainty, and when the technical issues that need to be resolved have been identified. So when the company's identified the issues and it then begins work in order to resolve them, that's when the R&D project starts, and it finishes when the technological uncertainty has been resolved, and the company then goes into essentially production phase if it's making a product, or launch phase if it's a service. That's where R&D essentially ceases. Again, as mentioned previously, the project does not need to be successful to qualify. It can fail miserably and still qualify for the relief. I will move on to, unless there are any questions that anyone wants to ask, feel free to do that. I'll happy answer. If not, I will move on to the different R&D tax reliefs under the regime.
Yeah, we haven't got any questions at the moment other than the Kieran one.
Okay, no problem. So the first, so there are essentially two different schemes. First, the SME scheme for profit-making companies, and then there are a separate set of rules for loss-making companies under the SME scheme. And then we've got the R&D expenditure credit for large companies, and also in certain scenarios for SME companies, which I will go through in detail in slides to follow. So in terms of the SME scheme, by way of an overview, the company obviously needs to meet the definition of an SME, which, as you can see in the table, there are certain criteria that needs to be met. So the number of employees cannot exceed 500. So it must meet the employee test and one or both of the turnover balance sheet tests. So if the number of employees exceed 500, then the company cannot be SME. If the number of employees are less than 500, the company also then needs to meet either the turnover or the balance sheet test. And the way that the relief is obtained is by providing a deduction of 130% of the qualifying expenditure. So 100% of the qualifying expenditure the company can get relief for anyway, and it's on top. There is also an enhanced deduction of 130% that the company can obtain. So I'll illustrate this with an example. So let's say we've got a company that carries out qualifying R&D activity in the period to 31st March 2021. The total quantum of qualifying expenditure is 100K. So in addition to the 100K being treated as a liable expenditure, the company can also claim an enhanced deduction of 130%. So essentially, it's a total deduction of 230% that can be claimed, which means that there is additional enhanced relief of 130%, 130,000, which is at the corporation tax rate presently at 19%, of course, which gives us total enhanced relief of 24,700. So the cash tax saving as a result of the R&D relief is 24.7%, which, as you'd appreciate, is fairly generous. And it's important to know that the claim has to be submitted within 2 years of the accounting period. So in this case, we've gone to the 31st of March 2023 to submit the claim. In terms of, so there are specific rules in respect of linked and partner enterprises. So what we're looking at here is, say if we've got scenarios where the SME company that is making the claim is another company's got shareholdings in that company, for example. So in group scenarios where we've got a holding company that has more than 50% shareholding or voting rights in the SME company, we also then need to take into account the numbers of the holding company, for example, in that scenario. And that scenario is essentially a linked enterprise scenario where the entirety of the numbers of the company that owns more than 50% of the SME needs to be brought into account. I'll illustrate this with an example in the next slide. And then we've got partner enterprise scenarios where the SME is owned between 25 to 50%. So if you've got, for example, joint venture scenarios where a company owns between 25 to 50% of the SME entity, and in these scenarios, we need to look at the proportionate figures. So we need to include the percentage figures based on the shareholding that the other company owns in the SME when looking at the SME tests and whether they are being met or not. So let's say we've got a scenario where a company A owns 51% of company B and then also owns 100% of company C. So in this scenario, we need to add up the employee numbers as well as the balance sheet and turnover figures for all three companies if one of these companies is making an R&D claim. And in a partner enterprise scenario, here we've got company A owning between 25 to 50% of B and C. So here we need to add up, the figures, the entirety of the figures for A, but only the proportionate figures for B and C, because A only owns 33 and 49% respectively on B and C. Because these figures are less than 50%, we only include a proportionate figures for A, for B and C in this particular scenario. I'll sort of move on to what it actually means by, what the various categories of qualifying expenditure are for R&D purposes. So as mentioned previously, the expenditure has to be revenue for tax purposes. It's also important to note that it has to be relevant for the SME's trade. So we need to demonstrate that the R&D activities are actually being undertaken to benefit the SME. It also must relate to one of the following categories. So for the SME scheme, the legislation actually prescribes a list of qualifying expenditure. So it's the staff costs, and we'll go through exactly what that means. Then it's the software and consumable items. So consumable items are items that are used directly for R&D purposes. So for example, if there's software that is used directly for R&D purposes, and as long as it's all the relevant conditions are met, the proportion of expenditure between when the R&D starts and the R&D finishes can be included as part of the claim. Then we've got subcontractor cost. Again, I'll go through that in some detail in the next slide. And then we've got externally provided worker costs, as well as amounts that are paid to subjects of clinical trials. What does actually mean by staff costs? So what categories of expenditure can be included in this category? So we look at salaries and bonuses, but we don't look at benefit in kind. Benefit in kind costs are not eligible, do not essentially qualify for to be an eligible expenditure for this category. Share options are also not included. Employer NRCs and employer contributions to pension scheme are. So we look at the employer costs there, not the employee costs. Dividends do not qualify. And again, sometimes it gives us issues in owner managed business scenarios where the directors only paying themselves minimal salary and maximum dividends, as we see, is quite a common scenario in family businesses. So in these type of scenarios, quite important to look at the remuneration planning structure, advise the client in advance, in terms of what the most tax efficient or optimum remuneration planning structure would be, because we can't claim R&D on dividends. So if the director himself is spending time on our qualifying R&D activities, then more often than not, it's beneficial to pay them more than just the minimal salary to be able to include their salary costs as part of the claim. If a staff member, they only spend a proportion of their time on R&D activities, then we need to make sure that we apportion their costs. So if an individual spends 40% of their time and the salary 60K, then, needless to say, it's only 40% of the salary cost that we can bring into the claim. Subcontracted R&D, as I mentioned earlier, I'll go through this further detail. So if you've got a scenario where, so the SME company does not have to undertake all the activities in-house, it can actually subcontract part or all of the activities to, it can essentially outsource it to another, individual even, or, another company. We need to make sure that the entity that's actually carrying out the subcontracted activities, those activities themselves constitute, they meet the criteria for R&D activities. So it's the project in its entirety, but also the activities that are being undertaken by the subcontracted entity, that they also need to meet the criteria. So in this scenario, the SME company subcontracting the R&D can include the subcontracted costs as part of the claim. And how much of the expenditure can be included? Here we need to look at what the relationship between the claimant company and the subcontracted entity is. Are the two connected or not? So if you've got a scenario where we've either got common shareholdings between the two, or we've, say, for example, got a group scenario where, one of the group companies is subcontracting the R&D work to another group company. In this scenario, where the two are connected, the claimant company can claim costs based on the lower of the cost that the subcontractor company includes in its accounts in respect of, staff and consumable costs, and the amount of the SME's payment. So essentially what we're saying here is we need to look at how much, what the costs are that are included by the subcontracted entity in its accounts, and we then need to look at the amount, the actual payment made by the claimant company to the subcontractor entity. We need to compare the two, and we include the lower of the two as part of the claim. Now, this can sometimes cause problems because, commercially, it might not work for the subcontracted entity to disclose the figures that it that is including. So, for example, if you've got a scenario where, the subcontracted entity only incurs 50 grand of R&D costs, but it's charging the SME company a markup of, twice that. So it's charging the SME company 100,000. Commercially, the subcontracted entity might not want to disclose that information. So, in these scenarios, what the legislation allows you to do is to make an election to only be able to then claim 65%. It's essentially a joint election, but for administration point of view, it makes life a lot easier because we don't need to then go through, what's being disclosed, etc. It's a lot simpler to make the election, and the SME company in this scenario can then only claim 65% of the payment made to the subcontracted entity. If the two entities are not connected, then this is the rule anyway. But if the two entities connected, then there is the option of making the election. Let's look at an example. So we've got a scenario where a company A subcontracts a qualifying R&D project to another company B, and the SME company pays 75k for the subcontracted work. Let's assume there is no connection between the companies, and company B that's undertaking subcontracted work actually incurs only 50k on the work. So let's say the two companies don't make an election. In this scenario, A can claim 65% of the payment that it makes to B, which would be 65% of 75k, 48,750. However, let's assume that the two companies, because they're not connected, they can actually make an election for connected party treatment. And in this case, the SME company can claim the lower of the payment that it makes to B, which is 75k, and B's actual cost 50k. So in this scenario, as you'll see, it's actually beneficial to make an election because in this case, A would be able to claim 50k as opposed to 48,750. So it's certainly more beneficial from a tax saving point of view to make an election in this particular scenario. We'll move on to grants and subsidies and what that means for the SME rules. So there are two categories of grant funding that we need to be aware of. So one is notified state aid, and the other is non-notified state aid. So non-notified state aid is essentially grant funding and state aid that's governed by the European Commission, and the rules there are slightly more stringent than cases of non-notified state aid. And what we mean by that is, so the reason why there is a restriction in these scenarios is because the EU rules don't allow accumulation of more than one state aid. So because the SME relief is deemed to be state aid, what the rules say is, well, you can't have grant funding, which is state aid, and also claim relief under the SME rules, which is also state aid. So you can't accumulate the two. And there is a restriction claiming R&D relief under the SME rules, but there is a distinction between whether, so what we need to look at is whether the state aid is notified or not. In scenarios where the company receives notified state aid, none of the expenditure as part of the R&D project can be included as part of the SME relief. The company can only claim for the costs under the RDEC rules, and we'll come on to how the RDEC relief works. But if the company's, if for example the company is, if it's costing the company 100k on R&D costs, and if the grant funding is only 10 grand, none of the 100k can be included as part of the SME claim. The entirety of the 100k, unfortunately, will have to be included as a part of the RDEC claim, which is less generous, unfortunately. So in these scenarios, it's quite important that the grant funding documentation accurately reflects. So if the intention of the grant funding is not to fund the R&D project, then it's important that the documentation reflects that, to make sure that the SME rules are not scuppered and the company can claim the entirety of the cost as part of the SME relief. In scenarios where we look at non-notified state aid, there is a restriction, but the restriction is not that restrictive. So in the example that I mentioned, where the company's incurring 100K of expenditure and only getting 10K in grant funding, it's only the 10K that will be restricted from being included as part of the SME claim. The remainder of the cost, i.e. 90K, can still be claimed as part of the SME relief rules, which are more generous.
Zeeshan, just before you move on, I've got a question in
Sure.
from Ian. Ian's
Yep.
asked, is there a standard form of words to use for two companies to elect to be treated as connected for R&D purposes?
No, there's no standard wording, Ian. Not really. And in fact, it's not even an election that needs to be made in writing. It's essentially just a tick box exercise, as far as I'm aware, on the CD600, and it's just something that needs to go into the white box. It's not. There's no set wording for it as such, really. No.
Brilliant.
So in practice, it would be sufficient just to include, the legislation reference in the white box as part of the CD600 submission, really.
Excellent. Thank you. Cheers, Ian. Thank you for the question.
Is that all right?
Perfect.
Great. So I mentioned that there are a set of rules for loss-making companies under the SME scheme, which mean that the companies, instead of just reducing increasing their losses, can actually elect to claim a repayable credit from the revenue. And this repayable credit is calculated at 14.5% of the surrenderable loss. And the surrenderable loss is essentially calculated as the lower of 230% of the qualifying expenditure and the unrelieved trading loss in the period. So what this means is that as long as there are sufficient losses available, loss-making companies can actually claim up to 33.35% of the qualifying expenditure. The 33.35% is essentially calculated as 230% of the qualifying expenditure times 14.5%, then times that by the corporation tax rate, so 19%. So you can sort of work that out to make sure that works in your spare time, but it does. So that is essentially how loss-making companies can actually make an election. And for cash flow purposes, of course, this is better rather than waiting until the company makes a profit. In a lot of scenarios, especially in startup scenarios, in the early phases of the business's life cycle, it can be hugely beneficial. I work with a lot of startup companies in order, to help them claim R&D relief, and a lot of them actually rely on R&D claims to be able to give them that sort of cash impetus to be able to carry on undertaking R&D activities.
Zeeshan, just before you move on, because that's given me a headache, that one. And there's a couple of questions popped in as well. So, if a company is making a trading loss, they can basically claim they get a cash repayment of 14.5%.
Absolutely.
Of the lower of the qualified R&D expenditure, or the unrelieved loss, so the loss that they're not currently getting relief for.
Absolutely, yes.
Okay. So it's a cash sum of 14.5% into the bank for the lower of the expenditure or the unrelieved.
Absolutely. And the revenue, at the minute, the timescales we're looking at is they would generally process this within 28 days of the submission of the claim, unless there are any further questions that they need to ask. And sorry, one thing I probably should have mentioned is that this loss goes away. So the company cannot actually then carry forward this loss. It's essentially selling this loss, the revenue, at 14.5%, if that makes sense.
Okay, so you're selling it for 14.5% as opposed to getting it at 19.5% potentially at some point in the future.
Absolutely.
Is that okay?
Yeah,
thank you. David's asked, accounts include subcontractors' cost, effectively wages of the self-employed workers. Practically, when disclosing this to HMRC, it's causing confusion. Have you ever experienced this in practical situations? So
I'm not sure if I understood the question. So
I'm not 100% sure I do either, David. So we might need some clarity on this. But what David's written is accounts include subcontractor costs in wages of self-employed workers. Practically, when disclosing this to HMRC, it's causing confusion. Have you any experience of this in a practical situation?
In all honesty, I haven't. But in answer to your question about, I mean, what the rule there is that it's the subcontracted costs that are included. So it doesn't, I mean, yeah, it doesn't matter what essentially the wage. What we need to look at is how much are we actually incurring in respect of subcontractor costs. So, you know, if we are paying a subcontractor 50 grand in wages, what percentage of their time is actually being spent on R&D activities? So we need to time apportion the cost really. So I'm not quite sure what I mean, I'm happy to have a chat offline with, is it David? Sorry.
Yeah, it's David. Yeah. So what we'll do, David, if that's not answered your question, then we're going to put Zeeshan's email address and mobile telephone number in the chat box in a moment. Mark might want to do that now, and then you can have a chat FOC. And send Zeeshan out on that. Brilliant, thank you. And then forgive me if I missed this when we were talking, but Adam's asked clarifying expenditure or eligibility of software and website cost. Are you coming on to that, or do they qualify?
Yeah, I'm not sure if I've got a specific slide to cover that. Again, this is probably a lengthy conversation, and I'm more than happy to have that conversation offline, Simon. But essentially, what we're looking at is when it comes to software, software businesses. We're not just looking at a brand new software or unique software that the company's developed. It can also include, if we've got scenarios where a company is actually, purchasing like 5 or 6 different platform softwares off the shelf, but it's actually it's done work to integrate the different platforms together in a unique manner that's not been done by anyone before. That can also qualify. So, as I mentioned previously, it doesn't have to be brand new. It can be existing products, existing software, but as long as it's being integrated together in a way that's not been done before, then that can also qualify. Again, I'm not sure if that answers the question specifically. It's probably a conversation that needs to be had. Again, happy to do that offline, not a problem.
Okay, thank you. And then Eddie's just popped up and asked, for loss-making companies surrendering their loss, how big of a payable credit is normal? And at what point does it become a big claim where further evidence is needed? I think Eddie's asking, how big is it got to be before we poke the revenue?
There is no black and white there really. It's a bit like, I guess, how long is a piece of string? Look, there is no, from experience, touch wood, none of our claims have ever been questioned, but from what I've heard with speaking to, accountants, there isn't a set criteria really, in all honesty. I've seen small claims being questioned where, descriptions haven't been provided properly, and I've seen, we do, large claims all the time, which, comes absolutely fine. So there isn't a threshold there, I'm afraid, which I can provide. Not sure if that answers the question, but again,
how long is a piece of string? So that's good, thank you. And I want to ask another question at the end around, because I was surprised when you said at the beginning how long R&D's been around. Did you say 16 years? Was it? 14?
Well, it's more than that. It was 2000, so 22 years.
22, yeah. I just find that remarkable that I'm that old. Yeah. But anyway, we'll perhaps come back to what the revenue stance is on R&D at the moment towards the end. But I'll let you continue. I'm just slightly conscious of the time. So.
Yeah, that's fine. Sorry, Simon, just roughly how long have you got? I can't actually see.
21 minutes. So we wrap up at 10:30. So we've got 20 minutes.
Yeah, that's fine. Yeah, we are. Yeah, I don't think there's many slides left. So. Just quickly, I know I mentioned the research and development expenditure credit RDEC rules previously, and this applies in scenarios where the company doesn't qualify the criteria for being an SME company, and it also applies to SME companies in certain scenarios. So, in scenarios, and again, this is quite unlikely in owner management family business scenarios, but if the expenditure exceeds €7.5 million. And also if the SME receives a subsidy or grant funding on its funding, on its R&D activities, which I mentioned previously. And again, this scenario, again, is not very common, but if the R&D is subcontracted to the SME itself by another large company or a non-UK company. So a large company, if it subcontracts R&D work, cannot claim, the subcontracted cost as part of the R&D claim. However, if the R&D costs are being subcontracted to another SME, the SME company itself can include those costs as part of its claim, but only under the RDEC rules. So the percentages, as far as RDEC rules concerned, so up until 30th of March 2020 was 12%, then it increased to 13% as part of budget 2020. I will illustrate this as part of an example. So we've got a company that makes taxable profits of £1 million for the year ended 31st March 2021. It spends 150,000 qualifying R&D work and makes a claim under the RDEC rules. So what we need to do is we need to then bring 13% of 150K. So the 13% is the RDEC rate that applies at the minute, which would increase taxable profit. So we actually need to bring it in as a taxable credit, if you like, which will increase the company's taxable profits to 1,019,500. The company's corporation tax liability at 19% would be 1,937.05. We then deduct, so it's a bit odd that the way it works in practice, but we then deduct the RDEC amount that we calculated in step 1 from the corporation tax liability of 1,937.05, which reduces the total tax liability to 1,742.05. So if we do the maths, whereby, so in this scenario, the company's corporation tax is reduced from 190K to 147,205. So the tax saving here, if we then divide that by the R&D spend, that gives us a net tax benefit of 10.5%. So as you can see, it's less generous than the SME relief, which whereby we, companies, depending on if a profit-making or a loss-making company, for a profit-making company, it's circa 25%. For a loss-making company, can be up to 33% of net tax savings here. But under the RDEC rules, the tax benefit is less generous. It's only 10.5%. From a practical point of view, I thought it would be useful just to include a slide in there around how to go about R&D reports. Now, there isn't even a legislative requirement to submit an R&D report, believe it or not. So, from a legislative point of view, we can just put in the R&D claim figure as part of the CD 600 and submit it. From a legislative point of view, there is no issues with that. However, with the way things are going with R&D claims, with revenue looking at this more and more closely and scrutinizing claims a lot more than what they were doing, a couple of years ago, it's our advice always is to put in place thorough and detailed R&D reports. Now, it doesn't need to be a thesis, it doesn't need to be S's and S's of descriptions, but this is the list that we would always. This is sort of, there are these sort of 7 bullet points that I've set out there. And, these are the way I see it is, these are essentially titles in our, reports that, and we make sure that we put in a description in respect of, all these categories. So we begin with providing a description of the project. We then talk about what the current baseline technology is at the minute. So where were things before the R&D work was started? What have we got at the minute? What's the technology out there that the company is trying to improve, or make better, or compared to what it's got at the minute? What is new that it's trying to develop? We then look at what the technological advancement is that the company is trying to develop. So what have you got at the minute? What is the company trying to make better? Where does the company want to be from a technological advancement point of view? We then look at what the uncertainties facing the company are. So, what is it that the company is not sure? Is it, what are the challenges that will be faced or the company is expecting to face as part of the R&D work? We then talk about the project start and end date, which I've already touched upon in the previous slides. And and we then need to ideally also describe the process that the company is or will be going through to resolve the technological uncertainties and issues that it's facing. And ideally also, again, not a specific requirement set down in the legislation, but it's always good to explain why is the technological uncertainty not readily deducible by a competent professional. Now, a competent professional can be, is essentially someone that's got experience in that particular field. So if it's a manufacturing business, it's the engineer working within the business. If it's an IT, a software business, it's the developer that's working on the R&D project. So, it's always good to explain why was the information or knowledge on that particular R&D piece not readily available to them. Hence why the company had to go through a process to undertake R&D to achieve technological advancements. In terms of documentation and evidence, again, no specific legislative requirements to have, detailed records in place. But again, from an HMRC's point of view, making sure that HMRC are happy in, especially in scenarios where questions are asked on R&D claims, especially on, some of the bigger claims, it's always good to have the record. So, for example, on staff costs, it's ideally, and again, in practice, we don't really see this as much, especially in family law and managed business cases. But, if we can have timesheets, whereby time is recorded for staff members working on R&D work, then that is, for belts and braces, that's brilliant, because rather than just, picking a figure out of thin air and saying, half of the time is being spent on R&D, if it's being recorded either via timesheets, board minutes, etc., then that is always good. It always helps the business substantiate the claim in case questions are asked. And also, this is something that I have seen previously, or still see, where there are no formal agreements. So if work's being subcontracted to another entity, there are no formal agreements in place in respect of that. So it's always good and beneficial to have a written agreement in place which clearly sets out the role of the subcontracted entity. And if we can go to the nth degree in terms of making sure that the description of the work that they do, is clearly set out and it meets the criteria for R&D, in terms of there's no harm in saying, that the R&D work that's being undertaken by the subcontracted entity is around achieving technology, resolving uncertainties around this specific area, and achieving technological advancement. So to be as specific as possible is best for belts and braces in case any questions are asked. And if any invoices are raised by the subcontract entity, again, put in descriptions in there, don't just say R&D work, it's good to have some more detailed description on invoices. So again, belts and braces, and, historically, generally what you see is, most businesses won't go into these sort of details, but because HMRC is scrutinizing claims a bit more, the more detail, the better. If there's any questions on that, again, more than happy to answer. But this, I think, is the final two slides, really. So I thought it would be useful just to talk about some recent and forthcoming changes to the regime. So in November 2021, there was a detailed report that was published, which set out some specific details on the proposed changes to the rules. And I'll sort of summarize the main changes that are being brought in from April 2023. So the government obviously realized that a lot of companies in the data and cloud computing arena weren't able to include some of their, or a large chunk of their costs as part of the R&D claim. So from April 2023, the R&D eligibility, the categories of R&D expenses are being extended, and data and cloud computing costs will also be included, which would essentially include expenditure on license payments for data sets and cloud computing costs that relate to computation, data processing, and software. Again, more detail will be published on this over the next coming months, and legislation will be drafted to sort of set out exactly what this means, and then refocusing the relief towards innovation in the UK. So this particularly includes subcontracted costs. So it's quite common to have an overseas entity or the R&D work being outsourced to an overseas entity. So there were talks. So as part of the November 21 report, it was announced that this will actually stop. So companies would only be able to include subcontracted cost in respect of subcontracted work if it's undertaken in the UK only. However, as part of the spring statement in March, the Chancellor did announce that if there is a regulatory requirement for the work to be carried out abroad, then these costs could be included actually as part of the qualifying R&D costs. Again, this will be confirmed over the next few months as the legislation is brought in to implement these new rules. From a compliance point of view, companies will need to notify HMRC. So again, to emphasize, these rules won't come into force until April 23. But companies will need to notify HMRC in advance that they plan to make the R&D claim. Again, I don't think it's been specified yet how much in advance, etc. And that will also be confirmed over the next few weeks or months. And all claims will always have to be endorsed by a named senior officer of the company, and the details of the agent or the advisor that's doing the claims made to the revenue. As part of the spring statement, just a few weeks ago, the Chancellor did mention a couple of times that the regime, the abuse in respect to the relief where bogus or aggressive claims being submitted they are being cited as a drain on the Exchequer. So there is a possibility of major reforms being brought in. Specifically as far as the SME regime is concerned, at this stage, we don't know what they will be. There have been talks about just having one scheme, so just having one regime, not having, SME or RDEC, just bringing them both together. There have also been talks about enhancing the generosity of the RDEC scheme. Unfortunately, we don't have a crystal ball, and it's difficult to predict exactly what those changes will be. But in my opinion, the relief is here to stay. But because of the recent cases where aggressive claims have been submitted over the last few years, the government is sort of over time will make the rules more and more stricter. That's it from me, Simon. So thanks for your time, everyone. These are my contact details, and I think they have been shared in the chat box. If any of you want to get in touch, feel free to email me, call me if you want to have a chat about any of the R&D claims in respect of your client, and I will be glad to assist.
It's brilliant, Zeeshan. Thank you. So Zeeshan's contact details are in the chat box. So it's Zeeshan how do you pronounce your surname, Zeeshan?
Khilji, that is
Khilji at etctax.co.uk, and the mobile telephone number's in there as well. And you will gladly have a conversation with any member of the Accountants Mastermind community around their claims and how it works.
Absolutely.
Brilliant.
Absolutely.
So those details are in the chat box. We've just got some questions that we would like to I'd just like to finish off with.
Sure.
When you was talking about the claims that some people are making, the fraudulent claims that people are making, the one that's made me smile the most, although in disappointment, was one firm. They'd contracted an R&D specialist, and they'd claimed the furlough payments as an R&D expenditure. Well, I just found absolutely remarkable. The furlough payments was an R&D expenditure.
Someone's on furlough.
That's right. How on earth could they be working on R&D when there was on? But anyway, there you go. There was a weird side to the profession that occasionally raises its ugly head. So just to finish off on the questions that we've got in the box, Kieran, I believe we've answered your first question around what was needed in the R&D claim. And Kieran's then also gone on to say, very informative webinar. Will the slides be available? So can we have the slides to send out to people?
Is that question? Yeah. I mean, no issues from our point of view, Simon.
Yeah, that would be brilliant. If we could have the slides, then Mark and Misha will make sure that they go out on the email, so you can have those, Kieran. Greg's asked, and I think I know the answer to this now. So Greg's asked, can the subcontractor and the company subcontracting claim R&D relief? And I believe the answer to that is yes, as long as they decide what relief they're going to claim between them. They can't both claim the same relief.
Yes, absolutely, that's right. So yeah, they can't be. Yeah, so you can't claim for the same cost twice. So both companies can't, absolutely. But the other part to that is it depends on which company is subcontracting the R&D. So an SME can claim for subcontracting costs, but a large company cannot.
Okay, brilliant.
If it's a large company subcontracting the work out, it cannot claim for those, full stop, unless it's to a university or certain public organizations. But if it's subcontracting the cost to another company, then it can't. but an SME account. Yeah.
Okay, thank you. And then Greg's asked, can you run over the types of qualifying expenditure? So very briefly, because obviously we're running out of time, but other than staff and subcontract costs, what are the other common costs that people could claim for?
So for the staff costs, we're looking at employer contributions, employer pension costs, wages and bonuses, and then software costs. So consumable costs would include, for example, software costs, items that I include that are, so for, energy, sort of heat and light, but only small proportion. So generally what we say is between 1% to 2% of energy costs, if they are actually being incurred as part of the R&D work. And then if a company is doing clinical trials, so I just did an R&D claim recently for a drug manufacturing business that tested the drugs on pigs and cows. So those sort of, the cost in respect of that can also be included. And it was because it was a drug manufacturing business, they bought, cannulas, etc., that they would use, the test tubes, etc. Because those test tubes were used directly as part of the R&D work, those type of costs were also included as part of the claim. So these are really the categories, and obviously subcontracted costs, which we've already talked about.
So basically anything that's directly attributable to that R&D can be claimed. Thank you.
Absolutely.
Eddie's asked, is the recording of this webinar available? Yes, Eddie, there will be a recording of the webinar. It will get downloaded and uploaded to YouTube, and you'll get an email as soon as that goes live, so you can watch it again. And then both Tez and Eddie have asked the same question, just in a slightly different way. The PAYE cap has been implemented. Please, can you elaborate on the changes? And then Eddie said, how does the PAYE cap work going forward?
Yeah, so the PAYE cap essentially, I believe it essentially provides a limit on, so what we need to look at is the total PAYE costs in respect of the R&D workers. And then I believe it's sort of 200% of that, which would need to be, essentially it's a restriction that applies on that. But in terms of the numbers, what I can do is, if you provide, I don't know if you've got Eddie's contact details, I can sort of send a summary of the rules, because again, that will probably take more than a couple of minutes to talk about that here.
Well, if you've got that, when you let us have the slides, if you could let us have that at the same time, then we can pop that on the email when it goes out to everybody that's come along, and we can also include it on the YouTube links and whatnot, so everybody can get access to it. It's just the final question. We've got 2 minutes left. Laura's very conveniently asked, do ETC tax offer support to accountants delivering R&D work? So how can it work with accountants? Yeah, in fact, 99% of my client base is firms of accountants. So this is what I do. I work with accountants to help their clients with R&D and other tax advisory matters. So more than happy to have a chat about that. So, and the way it works is, do you do the whole claim? Or do you support the accountant doing the claim? Whatever support the accountant needs, really. If they want a second review of the R&D report, we can do that. If they want to pass on the R&D work to us, we can do that as well. Because we only do tax advisory work, we will never, we only do tax, right? So that's all we do. So we will happily work in conjunction with you on that. And we are, very flexible. We can engage with you. We can engage with your client, whatever works for you. So you'll either work directly with the client, or you'll support the accountant working directly with the client. And the commercial aspect of that, you just talk to the. So if you do the work, there's no doubt there'll be an introducers agreement along with everybody else that does the same sort of process and the like. And that's brilliant. I've asked all the questions that I've got. I'm just checking the boxes to make sure I've covered them all off. We've got all the questions answered. That just leaves me to say thank you, Zeeshan, for coming along this morning and for sharing your knowledge and for helping the community help their customers with research and development claims. We're getting lots of thank yous, Jenny and Greg and David and Daniel, lots of thank yous in the chat box. So I know you've delivered fantastic value. And also thank you to the members of the community that have come along and asked questions. As I have always said, the questions that you ask as the community are what makes these sessions unique. So thank you very much for coming along, and thank you again, Zeeshan. We'll see you all again soon. Thanks for organizing this, and thanks everyone. Cheers. Thanks for your time. Thank you. Cheers. Thank you for watching this video with Zeeshan from ETC Tax, where he shared how you can claim R&D, research and development credits for your clients. As always, please remember to like the video, subscribe to the channel so you get notified the next time that we upload a video for you. And if you have any questions or comments, post them below and we will gladly answer them for you. On the screen now, you should see the 2 videos that we recommend you watch next to get the absolute most that you can out of the Accountants Mastermind.